Hey, good afternoon, everybody. Dennis Mattern with Creative One, and I am so happy that you have taken time from your afternoon to join me today. I've got to tell you, I am very excited for our speaker. I'm very excited for our topic because we're going to dive in deeper into a topic than I think maybe we ever have. And we are going to dive into looking at helping those clients that you have that own businesses that, the backbone of America is small business owners, and being able to provide them real service, real value opens up all kinds of opportunities for you as an advisor. Now, one of our carriers nationwide has put together an amazing program, and it is called Business as Your Legacy. It's actually Your Business, Your Legacy. And they are going to show you, and by they, I'm going to introduce you to Ryan Patton here in just one second. But he is going to walk you through the program that they have put together, and I will guarantee you this, you will be no less than impressed. So a couple ground rules before we get started. So one, I am recording this so that we can all refer back to it because this is pretty meaty stuff. Second, if you look to the right side of your screen, you're going to see a chat box. There's a box over there. There's chat and there's Q&A. Now, the chat box is public. So if you type something in there, everybody can see it. But if you type on the Q&A, only I see that. Now, why is that important? It's important because at the end of today's session, we are going to do a Q&A with Ryan. Ryan is a JD. He is an MBA guy. He really knows his stuff. So you're going to want to take advantage of that opportunity. But so again, we're going to do a Q&A at the end. You can use the chat if you've got any quick questions, or if you're feeling bashful, you can hit the Q&A box. Again, only I will see that. And then what I will do is I will ask Ryan those questions. Now, with that being said, it is my pleasure to introduce you to Ryan Patton. Ryan works for Nationwide. I'm going to move our slides along here and get that up for Ryan. And wickedly smart guy. He's been with Nationwide, which is an amazing company. If you don't know the Nationwide story, you definitely need to check that out. I don't want to take any of Ryan's time, but it's an amazing story. It's an amazing company. Ryan, with that being said, sir, I would like to introduce you and give you the stage.
Hey, thank you. Great introduction. I'll have to send you a 20 somehow for that over compliments. But excited to be here with everybody today on a topic, as Dennis was saying, is very exciting, at least us here at Nationwide. And gosh, this last year alone has been crazy enough to drum up a lot of excitement around business planning and what we're going to cover today, business valuations. So as Dennis mentioned, we have a program called Your Business, Your Legacy. That program is designed to help business owners with whatever they're facing. So there's a lot of things that business owners are trying to deal with day in and day out. 2020 has changed some of those priorities, to say the least. But there's a lot going on for business owners, and trying to have everything work with one another can be very challenging. So you need a coordinator, you need a quarterback to really facilitate that, and you need some sort of system to integrate all of those different pieces together. That's what Your Business, Your Legacy is aimed at doing. So we'll dive into some of those details, but really a focus for us today is going to be around business valuation. You have to know what you have to do anything with that, to do any planning. So we'll dive into some details there. But what I thought I'd start with first is just a really nice tool. And Dennis, I can share this, or if you want to share this as well. We have a 24-piece questionnaire out there.
Sure, Ryan, I'll go ahead and I'll put it up whilst you are talking.
I like it. So this piece here, it's one that I would encourage everybody to download and take a look at while you're having these conversations, while we're going through this presentation even. It's got 24 questions on it, and we refer to it as our risk assessment. This is a great tool just to have that introductory conversation to get people thinking about, gosh, what all should I be addressing as a business owner? This right here hits on most of the big questions out there that business owners should know. So
Ryan, I want to hop in, folks. I'm so sorry. If you look to the right side of your screen, if you look there, it says chat, Q&A, polls. It says handouts. So if you go over there, there's 3 things that we are going to look at today through the course of this conversation. My apologies, Ryan, for me not mentioning this. But they're sitting there for you. You can preview them. You can download them now. One will be the risk assessment questionnaire that Ryan's referring to now. We've got a case study in there, Smith & Sons Manufacturing. And then there is a business valuation fact finder that Ryan's going to mention as well. But if you look over to handouts, you do have that ability. If you don't see it or you want to get a copy emailed to you, I'm going to put a note up here in a second where you can let me know and I'll just email it to you. Okay, Ryan, that was my last interruption for the moment. Go ahead.
I like it. I like it. Thank you. And we can actually bump back over to those slides too. So again, that risk assessment tool, check that out. There's specifically a question on there that says, have you had a valuation done of your business in the last 3 years? I would say to folks, if they haven't had a valuation done with this past year taken into account, they really need to take time to get in front of that. The biggest reasons I think planning right now for business owners is so important is they've had so many changes to their business. I can't see folks, but typically what I would say is, raise your hand if you have a bottle of hand sanitizer sitting around somewhere from a distillery. I mean, talk about a crazy year where we have tequila companies making hand sanitizer. So just big shifts to business. And if they haven't incorporated those into their projections going forward, that's a miss on their end from a risk coverage perspective. So we really need to reassess what our business owners are doing and help kind of guide them through that process. So with that, we'll jump into some of the specifics around valuation. We're not going to make you experts by any means, but we want to give you some background on types of valuations, why it's important, a little bit of how the sausage is made, just so you get a sense of all the different opportunities coming from just evaluation. Most folks think it's pretty one-sided, but as we go through this, I think you'll see a little bit more detail there. So this is our agenda for today. We'll cover most of this, but we'll go into the case study as well. So with that, again, we're not going to make anybody an expert in valuations. I would think I'm pretty dangerous at them at this point in time. I do probably a couple hundred of them each year. This last year, I'd say probably north of 300 or so valuations. Spectrum of everything too. So everything from financial advisor practices, manufacturing, touch on everything, even down to shelf-stable beans. So anything is pretty much on the table. But again, there's folks out there, if they need a professional valuation, look for these sort of accreditations behind their names. There's some really skilled folks out there, and if they're going to be audited or have that risk of being audited, they're going to want to seek out one of these professionals. What we'll talk about is an informal valuation, getting them right in the ballpark from an insurance perspective, a coverage perspective. We just won't be able to see some of those extra details. So, if it's a subway that we're valuing, how many other subways are in that zip code, for instance? What did they sell for? We don't have that back-end data. So we're going to be looking at just the financials. So with that, again, we talk about valuations. Most folks would say a business valuation is great for succession planning. No questions there. It's great for buy-sell planning. No questions there. But it's also great for the business owner themselves heading into retirement. Knowing what my nest egg is, knowing that I've invested my entire working lives into this entity, knowing what I can walk away with and ride off into the sunset is key for them as well. So it's that exit planning. How do I exit my business is also very key. Not just coverage for the today and the what if, it's coverage into the future as well. So with that, a little bit of background for those folks that want to know. The IRS came out with some rulings way back in the day, back in 1959 and 60. And they said, here are a couple of methods that we're going to use to value businesses. Luckily for us, they haven't changed much. They've added some uniquenesses to how they value businesses. One of the ones that I think is just interesting is a social media presence. How do you value your social media presence? I never thought that would be the case, but it's definitely out there. So odd things have updated our valuation needs, but generally the metrics haven't changed. And good for us as well is a lot of those metrics are financial based. So from trying to come to a value perspective, we have some solid data all the way back to the early 60s as far as what the government's going to look for when they value a business from an auditing perspective. So a little bit about some of the basics though. Most small businesses, most closely held businesses are a little trickier to value. And with that comes some interesting things that business owners can do. I think going through some of the things we'll look at today, business owners have a little bit of a free rein when it comes to, what do I want my income to be? If you've ever worked with farmers, that's one of the ones that's always very interesting. It's, well, what do you want to show the government you made this year? So it's pretty interesting, all the different levers that they can pull as business owners to really drive and depress the income that they're showing while still having a sizable nest egg. So part of that though is tricky. So if we want to show a low income from an income tax perspective, how do we still maximize our value and how do we still show to a potential buyer that, hey, my business is strong, it's stable, it's something you should really be interested in. So that's why we really have to go through and what we call normalize their income. And that goes into pulling all these little details back into the cash flow to really come to a solid number. Because what we show the government sometimes, not that it's not true or not that it's not legally applicable, it just is a combination of those things that we can write off. And one of those perks is definitely being a business owner. I'd say one of the other things that's really important as we go through the evaluation process is what we call a capitalization rate. For small businesses, when you're working with these folks, this capitalization rate is really that risk factor. So I would say most folks out there would probably equate this best to maybe the Shark Tank method. If you've ever watched that show, folks out there will say, I'm going to have X amount of income and we're going to do a multiple of that income. What they're really saying is, based on the income you're providing me, I think that there's a risk factor there of maybe 25%, that I'm going to have to step in and take that risk, because if something happens to you, that income stream that I'm buying, it could drop pretty substantially. So that risk factor is really our capitalization rate. And it's something that we actually have to build out for each business. And this is a little bit of what it looks like. So just as we said, if I have an income stream of 800,000, I think that there may be a 25% risk to that income stream if something were to happen to the business owner. So I would be willing to pay $3.2 million for that income stream, knowing that there's that potential risk. That factor, that 25%, is actually pretty common for most small businesses. So I would say a majority of the ones that I work with, we're doing a value based on 25 to maybe the upper teens, just because if you're a small business owner, a lot is on your shoulders. You typically wear every hat from janitor all the way up to CEO, CFO, a little bit of everything. So with you doing more roles comes more risk. So this is one that we have to build out, and I like to show that just to get a sense of the complexities that we're working with when it comes to businesses. So again, they are a little more risky. A lot of smaller businesses, I would say, tend to be reliant on one or two larger contracts that they have, or one or two types of services that they offer. So all of those factors go into our risk assessment for a business. So that's why they're a little bit unstable, and 2020 taught us that pretty strongly as well. The way we did business, it changed drastically. So we want to incorporate that as well. So just a little bit of background on that capitalization rate. If you went to an actual valuation professional, they're going to go through and do all these different methodologies. They're going to say, my client, they have $1 million in their pocket. They have the ability to invest into everything that's on the screen here. They could do U.S. government bonds. They could do small caps. They could do, industry specifics to this sort of industry that we're looking to purchase. They can invest into all these things. So we want to give them what that investment could be as well. And that's where we really build this out. So a real true capitalization rate, what they call a discount rate on the front end, is incorporating all of these different methods of rates of return that they are able to get had they not invested into this business. So that's a little bit of background. We won't spend much more time on that, but I wanted to just throw that out there to you as well. And again, the types of valuation methods, we touched on this briefly too, but I would say most folks are familiar with two types. I would say it's going to be a market approach, or it's going to be an income and asset approach. And we're actually going to skip ahead of a few of these just because we're going to talk about them with our case study here too. So last thing before we jump into the case study, I would say sanity check is always present for us as well. You know, there's a lot of, how did we come to this amount? Where did this come from? You know, have a sanity check too. So does the number make sense? And we'll go through that as well. So with that, let's look at a case study here together. This is a manufacturing company.
Actually, Ryan, before you get too far, it's the voice of Dennis coming in here.
I love it.
Okay, so I want to ask a question of the audience because one, I'll be honest with you, listening to you talk, this is exciting and a little intimidating for those of us that this is a little new. And so one of the questions that I want to put out to people is this question first and foremost. Are you working right now? I'm going to put this out as a poll question. And excuse me, I had to hit the sneeze button there. Are you working right now with small business owners on legacy issues? So I pushed this poll question out. Everybody take a second because I'm so curious to see, because this is an opportunity. You know, a lot of us work with small business owners, but we work with them on the individual side. And so what Ryan's showing us is an incredible tool. The support you're going to see is like next level. And so it's kind of going, Ryan, I don't know if you're seeing the numbers come in here, but it's kind of going the way I thought it would go, which is about 75%. I'm going to round it just a little bit, but about 75% of the people that are on here, they're not currently working with small business owners, but they'd like to. So the other question that I want to ask everybody, for those of you that are you providing your business owning clients evaluation? Are you able to do that? Are you doing that currently? So I'm very curious how that comes in. There's one. So we'll see out of this nuanced secondary question. So let's go with that, and we'll let that percolate. Now, I am going to, if you came in a little bit late, I am recording. So we are recording this webinar, so you will be able to review this after, because Brad, you're right. We are jumping through the slides because Ryan knows this like the front, back, and sideways of his hand, which, you know, that gives a guy comfort knowing that you'll be able to work with a guy like Ryan on this. Okay, so that will be available after. Let's go back to that poll. I'm so curious. And yeah, just about what I thought. So it comes in that about 20% that are of the people working with business owners, they're providing evaluation of the business. Ryan, does that surprise you before we get into this case study?
No, actually, it's one of those conversations I think that folks have said, you know, how do I bring up that conversation?
Yep.
It's challenging to bring up. So
Absolutely. Now, I'm going to throw one last question out, and then Ryan, I swear I'm going to get out of your way. So there's support material, and I'm going to put this out there. I don't want to send people things that they don't want, because who likes that? I've got the questionnaire, I've got the fact finder, and then there are some additional pieces that Nationwide has. If you'd like me to send that to you, hit yes on this last question. If not, no. I'll collect. It'll tell me who said yes, who said no. That way I'm not going to be a bother to anybody. But I do want to remind you, if you want to look at this, so Ryan is pulling up the case study right now. And if you'd like to follow along with the case study in a little more detail, if you look over at the handout section, it is available. The case study is sitting there right now. So if you look over, it says chat, Q&A, polls. Keep going. It says handouts. If you click on handouts, you'll see in there that you can download the case study so that you can follow along in greater detail. So, okay, Ryan, with that being said, the floor is yours again, sir.
Hey, I like it. Thanks for the questions. Yeah, and the reason we're jumping ahead is we're going to cover a lot of this detail through the case study. So I didn't want to just bombard you with information without having something actually to, what does this actually mean? What's it look like in real life? So that's what we'll go through right now. And as Dennis noted, the fact finder is probably the first place to start when it comes to how do I go about doing a evaluation for a client that I have. The fact finder that we've got is 2 pages. It's a front and back. So most of the heavy lifting as far as how do we come to the number, how do we do all of those things that we covered a little bit on just briefly before, all of those things we'll do for you. We're happy to dive in, do all the tax crunching, all of those things, get them to the right numbers. All we'd be looking at is asking a few extra questions on your end. So if you have the fact finder, I'd encourage you to look at it. There's a couple of things I would just point out real quick. One of those is it's going to ask you the type of business. If you could always just give me a little more detail around that. I have folks that'll say, well, the business is a construction business. If you could give me just a little more detail to say, it's a construction business, but they mainly do road projects, or they only do framing for houses. That'll help us pinpoint down for them a little deeper to say, their industry for framing values their business by certain multiples of EBITDA, if you've heard of that before. So it'll help us be a little more specific for you. But those are about the extent of the difficult questions. Most of the other items on that sheet are just about the business owner themselves. So who they are, a little bit about their age, things like that, just so we can attach some life insurance quotes as well to the output that we'll go through, just so they have a sense of what would coverage look like to cover the risk that's come up. So with that fact finder is pretty straightforward. The other things that fact finder asks is for 2, maybe 3 years worth of their financials. And the reason that's important is what we're going to go through here. So a little bit about what we do that maybe separates us from some of the competitors out there is we'll go through and do a pretty deep dive for you. And this is where I think it gets pretty fun. So as Dennis was noting, I'm kind of a tax geek when it comes down to it. So my JD, I mainly focused on business planning and business tax, a little bit of agriculture as well, but mainly a business focus. And the reason I think that that's interesting is there's just so much more you can get from, say, a simple tax return if you know where to look. And the reason I bring that up is any of those little nuancy things that we see, we'll give those back to you to take to your client. And we'll go through some of those right now. So what we're going to look at here is an S Corp. This business is an S Corp because it says 1120S on the top left. Some of the unique things about this, it's a pass-through entity. So we know that there's a couple of special tax provisions we want to look out for, and we'll go through some of those as well. But one thing that just always strikes me, which I think is a great value add for your clients, is say this were a C Corp that we were working with. If I look at just this very top section where it says data incorporated, if I know it's a C Corp and I know that it's past a certain point in time in 2009, I know that we could have a discussion with their attorney, their CPA, the client, you as well, of course. We'd be able to have the discussion to say, if we sell your business properly, we can get away from $10 million of capital gains. We could sell your business for at least $10 million per person and not have capital gains tax at all. So pretty powerful things, and that's just from looking at a simple date on the top right of a tax return. There's ways that we can structure the sale to really maximize what they can walk away with in their pocket, which leads to annuity sales, leads to maybe life insurance solutions as well, maybe some long-term care solutions. If we can just maximize the amount that they get from a sale of their business, that's free money that they would have given to the IRS that they can put into some financial products for their well-being. So that's a little bit more of my tax nature coming out, but I wanted to share that with you just so you had a sense of what all we're doing. It's not just looking at simply the value and giving them that. It's how do we actually give them to the best value that they can walk away with. So some of the things that we'll look through as well. This is the front page alone. That's all we're going to look at. I won't give you the tax crash course necessarily, but some of the things on here that I wanted to show you. Line 7, if you look at that, Everett, on an S Corp in particular, that is how much the owners are paying themselves in W-2 wages. So that's an interesting perspective. How many owners do we have? Do we have any key talent as well? So a lot of times in these closely held businesses, you'll have some family members that are maybe a little more lax on their duties when it comes to the business, as opposed to some of the other owners. Maybe some of the owners are kind of the lieutenant, the sales lieutenant. Some of the other owners may be in charge of all of the books. So maybe we need to have a discussion around key person coverage for those individuals. Same with the next line down, line 8. That's going to be those key employees. So are we doing the right things from a business perspective to make sure that the business we have stays intact for the sale to the next owners, or even for ourselves in the future? You know, if we have one of those key employees walk away, what does that do to our cash flow? That definitely impacts the value of their business. So we want to make sure we're incentivizing them to stay around. So maybe that's some sort of executive bonus where we can target those specific individuals. Maybe it's a 401k plan, something like that, to really incentivize them to stay. It's more of that employee discussion just to make sure that the business that we have stays the business that it is while we make a transition. So a few other things on here as well would be near the bottom. If anybody out there sells any 401ks or anything like that, pensions, that's that line item 17. And for me, looking at this business, I see that we've got 36,000 going into some sort of 401k, but I know our owners have 1.3 million in compensation. So some conversation hasn't happened as to maximizing what they can put into their 401k. So we'll point that out to you too. And then a couple of other things that we're looking at too would be all of those interesting other deductions. So are they getting the right employee benefits? So are they doing the right thing with medical, their dental, vision, that sort of plan? Are they maximizing that for the owners? Some of the other things that we'll point out to you as far as other deductions that business owners can take. I see this, I don't know why, but I always see this with dentists. There's always some sort of BMW or Maserati or something like that as a company car. So we'll reincorporate all of those little nuancy things back into the value too. The other last little tax tip that I'll give you as well is I see on this one, we've got a line item 7 of 1.3 million. And the bottom line, that bottom line figure that comes into our pocket from a K1 perspective, that flow through money, is 1.2 million. Under today's tax law, they would be incentivized to take less in W-2 wages and push more towards that bottom line. And that's because there's a provision out there, it's called 199A. And that provision, if you're not aware, that one allows business owners to take from that bottom line up to a 20% deduction on that income. So if we can talk to their CPA and say, hey, have you guys thought about making a shift from less W-2 wages to more bottom line income? That can actually free up enough cash to fund some of the solutions that we might uncover for them. So that's a little insight into what we do as far as the tax perspective goes. We'll go through again all those little nuances, trying to come up with an actual income for the business and any of those tips and tricks too. So maybe they want to have a discussion with their CPA about that tax provision. Just some of the things that we'll do a little deeper dive than maybe the typical valuation service. So with that, we get through all of that nitty gritty. Just for your information, that takes us probably about 2 days to go through. And so we want to make sure we're doing the best job for you and finding all those little tax tips and tricks. And if you also send in the business buy sell, we're happy to look through that too. So we'll get all of the details back as far as provisions in their buy sell that maybe they want to look at as changing while we're going through this process. But about 2 days, you'll get something like this back from us. And as Dennis noted, there's a longer sheet. I've pulled out a couple of the important pages within that actual output. This one in particular, I believe, is page 7 of that longer document. For me, I'm a chart guy, so I love pictures as opposed to the actual numbers and spreadsheets. So with this, what we'll always do for you, as we mentioned just on the very beginning of our call, there's a lot of different ways that you can come to a value for a business. What we've done at Nationwide is we've come down to five key metrics that the government has said, these are probably our top ones that we'll use most frequently. So we want to give that to every business owner, just so they're aware of the different ways they can value a business. So for this business, we know it's a manufacturing company. This one in particular comes back with a bunch of different valuations. For this business, if we can pool all of our money and get this thing for $3.5 million, we'd be getting a heck of a deal. This business is really better suited for a value of, say, 14.5 to 16 million. And that's because certain values just don't make sense for certain businesses. So we skipped over this a little bit quicker in the initial part, but book value, that's going to be good for, I'd say, real estate-based companies. So maybe a hotel chain or a trailer park development, something of that nature. It's really going to be based on the assets that they have as opposed to income. The next one over, that straight capitalization, that's going to be your professional groups. So dentists, doctors, lawyers, financial advisors, those folks fit into that category. That one in particular says, I don't really have assets, I have a skill set. And because of my skill set, people want to come see me, people want to do business with me because I have the knowledge that they're after. So I've got a computer and that's about it. So it's really my skills that they're coming for, and that's how we're going to value that business. The next one over is more of manufacturing, construction, things with physical assets. That one says it's excess earnings capitalization, and that's a fancy way of saying I have some sort of asset that I have to have, and I'm going to use that asset to produce some sort of service or some sort of widget, and that service or widget that I produce is what generates income. So I want to give that person credit for their assets and the income that they derive from that. So that's that column there. The thing that one doesn't account for is just folks coming to their door. So they've heard good things about you, and they're going to come to your door regardless of that asset that you have. They're still going to come and get your services. So that's what that next column over is, that goodwill approach. And then lastly, the one on the far right, that one is a discounted future earnings. That one is very good for those businesses that maybe they started in a new location in another county or another state. We don't really have good projections yet as to what that business is doing, but we have a good feeling based on our current business what we can anticipate at that new location. So it's a little more speculative, but we won't use that often, but certain instances it's a good fit. So those are the top 5, and what I'll always do for you is I'll narrow it down. I'll say, this sort of business, it really is a better focus for these 2 methods. So here's your range of value. So the other nice thing that we'll do for you as well, which Dennis, I don't believe I shared with you, is an email kind of jotting down all of these different discussions that we've had. So the changes to maybe how they take their income, the type of value that we would use. We'll also give you the industry specifics. So if this person went and said, I'm just going to go to the bank, have this person go to the bank and get a loan, we'll let them know what the bank is going to use from a value perspective if it differs from what we send out.
Hey,
so
Ryan.
Yeah, go ahead.
I just got to chime in here because this, to me, I've seen this so many times, and I love that you referenced Shark Tank because I love watching that. But I've seen this in personal experience where there is a business owner, small business owner, and they've never done any kind of a proper valuation on their business. And they've done this. They've told their spouse that if anything ever happens to me, don't accept less than blank for the business. And then they have no idea. They're coming up with that number through something they saw somewhere. And then their poor spouse thinks that everybody is trying to rob them when they're trying to get a valuation. The other thing for everybody that's here, I do want to tell you, And we'll mention this at the end, but some of the additional resources, because I will tell you, Ryan, you're so doggone smart. This is like we're being fire hosed with awesome information. Nationwide has some incredible material put together for you as an advisor. There's an advisor guide. There's guides for clients. There's the worksheets. There is so much that is built out by Ryan and his team that it's just amazing. Just amazing. But please continue.
Yeah, thank you. Thanks for the comments. Yeah, and it is a little bit of a fire hose, but that's why we're here too.
Yep.
So I would say all of these conversations we're having, I'll have with you, a prep call. I'll also have with, if the client wants to be on the call, if their CPA, their attorney, anybody that wants to listen, we're happy to be there for you too. So don't think we're just leaving you to, be out there on your own. We want to be there and have the business be successful and have that conversation, be as deep as they want to go. So with that, we'll jump through a couple of other things just real quickly. This is kind of my catch-all slide. We're giving a value for a business, but it's not necessarily the value. There's going to be unique things about the business that we may not know. A couple of those things would be, say, patents that they have, or maybe a unique process that they have. Those things are going to be a little challenging to come to an agreement on. So we want to get them close to that target, but we're still going to ask them to add in those extra layers to this conversation as well. So with that, we won't dive into all of that fun stuff there, but we will go through, I believe I've got one other thing for you just real quick. I want to show you the Smith & Sons actual output. So one thing that's on the output that we didn't cover through the slides here, there's a special page in this output that I think is just a great resource for you. So it's on page 15 of 40 on this output. And this is in every output that we give to you. This is called the Your Cost Summary. What I think this one does is really, really nice for the client. This one says, hey, we've done our due diligence. We've got all of your data. We came to that number. Now, what do we do with it? Now we go through and say, if you want somebody to come in and buy you out, sure, they can get a loan. We've got that listed there for them. They can go get a loan with a commercial banker, maybe a private equity group. Maybe it's for 6% at 10 years. What does that actually look like? And we'll be able to have that conversation with them to say, hey, we know your cash flow. If you do this loan for 10 years, you're going to be walking away with a business, but you're going to have zero money over the next 10 years. Because just a payment for this sort of interest, we've got this person's value at roughly 14 million. A payment on a 10-year note with that interest rate, that's going to cost them a little under $2 million per year. And if we add taxes on top of that, that's north of $3 million. So can the business actually support to do that sort of financing? We could also have a conversation around, hey, I'm going to sell it to my kids. They'll just pay me on a seller's note, an installment sale. What does that look like? And down the list. So sinking fund, cash is king. So if you know of any clients that have $14 million, let us know, let Dennis know. That one's always a good one to find, but it's pretty rare. And then we'll always show them what life insurance looks like too. And I bring that up because I think there's certain industries where it's very, very good. So one thing that I'll just leave us with before we head into probably the Q&A session is there's probably 3 industries I would have this conversation with. And it's just due to all of the changes that happened this past year. And so for the first one, I would say anything that has to do with manufacturing, that's an easy conversation to have, to say, hey, I know you made some big shifts to your business. You went from making tequila, now you're making hand sanitizer, or you went from making ladders to making PPE equipment. So big shifts. Have they accounted for when that's going to come back? When are they going to shut down their line and replace it with what they were doing? And at what capacity are they going to be going forward? So that's a key one. Big shifts on the good and the bad. So some folks have definitely been negatively impacted, and other folks have been positive from an impact perspective. The next one that I would have this conversation with is construction groups. So folks out there, if you've tried to get anything done on your house this past year, it has been very, very challenging. We tried to get a roof put on our house about this time last year, and we were told, yep, we can get to you. It'll just be November. So very, very hard to get work done, and they have just skyrocketed. Every construction group that I've seen has been positively impacted from all of the changes that have gone on. The reason I bring up construction too is on this sheet, that bottom line there, that life insurance, for construction groups in particular, they get a perk of life insurance on their books. So we know that life insurance covers them if the what if happens, but it also has a cash accumulation side as well. And for construction groups, they can actually use that for bonding. So if they need to have bonding for a certain project they're going to bid on, they can use the life insurance on the books of their business for that bonding too. So talk about a triple whammy. They get the death protection, the what if protection. They have the cash value if they need to dip into that to get new equipment or run their business. And they can also use it for bonding. So a great group to work with as far as life insurance coverage and really helping them grow their business. And then the last one that I would focus on is the professional groups. So COVID, not only a big shift to manufacturing and what they're doing, but it also accelerated a lot of folks from a planning perspective. I can't tell you how many folks I talked to that said, well, we were going to, address this in about 5 years, but I went out. I went out today. Actually, I went out yesterday. Can you make that happen? So folks really, really accelerated their plans. And that brings up some interesting planning that we can do for them too. So how do I sell my business? How do I mitigate, minimize my tax impact? We can go through all those different exit strategies with them as well. So those professional groups in particular, that seemed to be hit the hardest. And the one that actually comes in the most anymore is actually financial advisor practices. So folks on the buy side and on the sell side. So we're happy to work on either direction the client's wanting to go. Buying a book of business or selling a book, buying a practice, selling a practice. We can go through all of those nuances too. So those are probably my top three that I would focus on: manufacturing, construction, and then those professional groups. So I wanted to lay that out there for you, but we've covered a lot of information, and I know we've touched on a little bit of everything when it comes to why is evaluation important. Just to recap, they're great from a protection perspective for those individuals today, but there's so much more to it, and there's so many more sales solutions, sales opportunities that you can use and implement with these folks to help them in every step of the way. Either they're selling, they're continuing to run their business, there's always something we can help them with. So with that, Dennis, I don't know if we have any questions out there, but.
Yeah, you know what? We'll give it a pause here for questions, and I'm going to go ahead and I'm going to jump us back over into our slides, and I'm going to jump ahead on our slides here. I've got to tell you, so one, Ryan, question for you. What you all have put together is amazing, and I want to share some statistics. I'm going to get the phone number up here and some contact information. There we go. So if you're not working with businesses, why would businesses care about this? And I'm going to glance off to the right because I've got the statistics right here. 66% of closely held businesses fail when they transition from one generation to the second. So you've got a business owner that has worked they've worked their tail off and they've created something incredible and they want to hand it to the next generation. 66% of the time it fails because they're not prepared for other reasons, but the preparation's there. 85% of them fail from second to third, and 96% fail from third to fourth. So you've got folks that are building something forever, and unless they prepare, it's not going to happen. My gosh, when I look over at the stats on disaster recovery preparation, it's terrible. In fact, I would even ask you as an advisor, do you have your own house in order? But so Ryan, question for you. So I know that I'm looking over here. I see a client guide. I see an advisor guide, I see worksheets, and I see another program guide for business owners. Where should an advisor that's not as nuanced, working with, like really working with someone that owns a business, where should they start on educating themselves?
Yeah, I would say look through that advisor guide. It's going to cover a lot of the details on, why is there a need? Some of those items that you mentioned, Dennis, as far as that transitionability and the risk of failure. A lot of great conversation topics are within that. And I would say, if you're thinking about having a conversation, have that 24 questionnaire with you.
Yep.
Drop it off to some of those clients that you've got, or sit down with them and say, hey, have you got a second to go through this with me? Just help them open their eyes to see what all you can offer them, and some of the gaps that they're facing.
So I do see a question. That has popped in, and it says, "What?" I'm going to paraphrase it, but what's the cost for an advisor to work with the Your Business, Your Legacy program? What do they have to pay?
Yeah, as much as you want to. No, I'm kidding. No, this is all complimentary. So we get our value from, hopefully there's a sales solution that we can help with. But aside from that, we want to make sure that business is around for the future. So everything that we talk about, everything we do, it's all complimentary. So no cost.
All right. I had to get rid of the slide now, Ryan. It's just you and I. So this is something that is really cool. This is something that I do love about Nationwide. Nationwide is on your side. It's no BS. You guys, this is an amazing program. And I do know from talking to you offline that, of course, what Nationwide does want, Nationwide is not a charity, although you guys support a lot of charities. Nationwide is not a charity, so they want a shot at the business. They want a legitimate shot, but when you're doing this, we're not taking and throwing spaghetti against the wall, and you know what, you really couldn't, if you don't have a little bit of nuance and understand how a small business works, if you walk in and try to have this kind of conversation with a business owner, they're going to sniff you out pretty quick that you're kind of a tourist. So you do, as an advisor, you do have to do your homework. And I can see the list of who's on here. So I know that we've got serious professionals that are on the call with us. But that being said, with this program, Nationwide will do the legwork. They're in it with you. They do want a shot at the business and that's fair. That's very, very fair. But there is not a fee. There is not anything that's being paid. So it is a heck of a program. Let's pause for another second here on questions. For those of you that are on, I will send out, I'm going to send out to you that advisor guide. I think that's an interesting one for you to see, to take a look at and see what all comes to the table. And then I got to tell you, Ryan, we may have to do a follow-up because this is very impressive stuff. It's not for everybody, but when you think about those businesses that are out there, again, I can literally think of those. Businesses where the business owner said to me when I was in private practice, I've instructed my spouse to sell it for blank amount. And it's like, that's just not going to happen because your number is unrealistic. You're giving your partner, your spouse, an unrealistic number, and you're just setting everybody up for failure.
Right. Yeah, and I know we touched on it just briefly, but those agreements that they have, let us review them for you too. We won't charge, attorney's fees or anything like that. But I can tell you, just to your point, I had one just yesterday that they had a stated price within their document, and their document wasn't from this turn of the century either. So definitely a price that was not what the business was worth. So
yeah,
definitely review those.
That was fascinating. One of the things that I'm going to take away is with those different valuation methods, what is the appropriate valuation for that specific business? Because like you were saying, this one makes sense if you're this type of business or in this type of industry. This other one, I'm sure everyone in that, if we were to go back to that example and it ranged from, I want to say about 3.3, somewhere around there, to as high as I think the big number was at like 14. Mm-hmm. So naturally, somebody's going to say like, well, yeah, I'll take 14 million for it. And it's like, my business is worth 14 million, and maybe you think that, but the reality is your business is really what someone's going to pay you for it. And
that's right.
So you need to know. So there's some valuable opportunity here. I don't see any other questions popping up, but here's what we're going to do. I'm going to get that information out to everybody. Ryan, I want to say thank you for being on here and talking. Your command of the topic is awesome. And in fact, your ability to adapt to the software, awesome too. You got big marker down. But on behalf of Ryan, on behalf of Nationwide, and on behalf of Creative One, I want to thank you for taking time today to learn about this, because this is a heck of an opportunity and a great resource. If you've worked with Nationwide, you know how awesome their Social Security software is. Maybe you've seen Your Land as Your Legacy, which is kind of a sister program to this, which if you're doing anything with the agricultural industry, you need to let me know and I'll tell you more about that. And then here we are talking about your business, your legacy. Amazing programs brought to you by Nationwide. And of course, we want to introduce it as your friends here at Creative One. So with that being said, Ryan, thank you for your time today. Everybody else, thank you for your time. And we'll call it a wrap. That's our afternoon. Let's all get out there and sell something.